Nike's results will stay weak until they get their inventory realigned with sales. And that's not going to happen overnight. It will take at least 2 to 3 quarters at the minimum. So we do have some downside or some weak results for the next few quarters. But I will say that they are making the right moves. The new CEO, Elliott Hill, has a plan that we think will work. It will drive Nike back to be the lead and get the mind share that it has held for so many decades.
In that case, have we seen the bottom in the stock price?
Well, I mean, the shares have clearly come off from their highs and they're down again today, 7%. I'd say the bad news is out. So from here, they should continue to realign inventory. This upcoming fiscal fourth quarters of theirs is when they'll probably make the biggest push, and we should hopefully see inventory begin to normalize over the next 2 to 3 quarters.
Compared to their competitors, this inventory issue, this, I would argue, mismanagement of inventory, it feels to me, is it materially different than its competitors?
Yeah, absolutely. This is a Nike specific issue. So what happened here is that Nike has a lot of classic inventory that just isn't resonating with customers, and therefore they have to find ways to clear that, which they'll do through their outlets and the value wholesale channels. The other competitors, if you're talking about Adidas, Puma, or others, they don't have this issue
Hmm.
because they have the right inventory for the most part in place, and therefore they will not have as many discounts as Nike will have over the coming 3 to 9 months.
At the same time, though, they talked about gross margins being also impacted by tariffs, and that would be an industry issue, right?
The tariffs is an industry issue, but the decline that they guided to, the 400 to 500 basis point decline in fiscal fourth quarter, the bulk of it is due to the markdowns that they will face as they clear this unwanted inventory. So tariffs does have an impact, but it's a very small part of that margin compression that they're forecasting.
Poonam, how did the company get in this position where they had this inventory that wasn't resonating with customers? Because I think of Nike as like really on top of knowing what the customers want and delivering some really cool products. What happened?
I think this all happened with the previous leadership when John Donahoe came on board right around the pandemic, and he had a strategy to go digital. So essentially pulling out of many wholesale channels in a meaningful way, where Nike was really focused on driving growth in digital. The product was changing, but it wasn't changing enough. You saw, for example, they used a shoe and they just rolled out multiple color waves in it. There wasn't as much innovation as what the consumer is used to from Nike. So it was execution. It was just not having the right product. And I think they're back on their game now. They have a leader at helm that knows the product, that was a merchant. So they do have some work to do, but I think they're moving in the right direction.
Who took their share while they were stumbling, and can they get it back?
Everyone, the Ons, the Hokas, Adidas, you name it. I mean, when I went to a Foot Locker, let's say 7 years ago, it was largely Nike. Today, when I walk into a Foot Locker, I see everything in there. I see
Mm.
Nike, I see On, I see Hoka. So everyone took a little bit of it.